Hey guys, welcome to the Silver Report. Here we are. It's Tuesday, February 21st, 2017. And let's get right into some of the economic factors that will be playing a part into the price of precious metals. And right now we see gold and silver acting way differently than makes sense. Because what we're seeing right now, despite Janet Yellen coming out and her normal interest rate hike bash, we see that gold and silver have been on the move. Now, what works for gold in practice rarely works in theory. The last 3 U.S. interest rate increases, all other things being equal, be bad for a metal that have seen prices jump in the months that followed. Gold is up 7% since the Federal Reserve raised rates on December 14th. It jumped 13% in these 2 months following the last increase in December 2015, 6% the previous time way back in June 2006. And so it's no longer being beaten down the way it used to be. They no longer have a control on it. And this might be partially in the fact that the New York Fed is coming out and saying that households are facing 3% interest or 3% inflation as opposed to 2% that they're originally calling for. So inflation is heating up much faster than they had anticipated, and it will be affecting every household in the United States. Precious metals initially plunged as investors noted Trump's vow to supercharge the economy with infrastructure spending, but we saw them rise back immediately to the levels they were because there's very strong buying. There's some selling pressure. There's also some paper market suppression that has been taking place very recently. Some attempts, as you can see, demand around the world doesn't match what you see on the COMEX. And what we're seeing is that despite these news conferences, news briefs, and it's amazing that this economy just runs so much on emotion. One thing to pay attention to is the fact that consumer confidence has dropped. When they're doing polling for consumer confidence, it's dropped. People aren't as enthusiastic anymore. In December, we saw there was great enthusiasm, massive enthusiasm. Now there's some fear among investors. That's not good for the markets. So with Trump's time in office so far focused on other matters besides the economy, though he was not able to get his finance and some of his cabinet picks in. So the trend, it was quickly halted, it reversed, and we've seen some massive gains for metals. And despite the Fed's threat of a rate increase, we saw the price of metals put on much more resistance. We saw the price of silver rise up above the price it was sitting at during the speech. And so the market worries more. It's worried about something beyond the news anymore. It's because people are beginning to wake up. And so once there was a time when rate hikes used to crush down the price of gold, of metals. And what we're finding is Janet Yellen can't halt the Trump gold rally that funds are betting against. Gold bulls are acting, if they can't believe a good thing, when they see it. Silver, we've seen, has been performing extremely well. We have been on a constant, steady movement up. So apart from any massive crisis that has taken place, though there is the shuddering of the world's economies, we see so much turmoil throughout the European Union, in the United States dollar, talk among trade. And so what we're seeing is that those fears, they're outweighing the demeanor, the talking heads that are going out on the corporate media and telling people how great everything is going, how great everything is going. I mean, they get their paychecks. On average, Americans across the United States have had their hours slashed, had their pay slashed, have their wages slashed. So these people that they keep telling everything is so great, they're beginning to wonder, Maybe it's not just me. And so hedge funds, they reduced their wagers on a bullion rally for the first time in 3 weeks, just before prices neared a 2-month high and capped a third straight week of gains. Not even the Federal Reserve Chair Janet Yellen outlook, like she said, was for this interest rates, had enough to disrupt this party in the precious metals market. Investors, they snapped up metal as a store of value and concern. We have some massive fiscal policy changes underway. We also have some talk of some very large government spending. On top of that, in a normal economy, that would be okay, but the fact is that it's deficit spending and we have massive sovereign debt. There's also anxiety going on over what's taking place in Europe, as we saw what happened to Marine Le Pen, the Netherlands, France, Germany. And they are looking to exit the European Union. So we're watching the collapse of a major world currency. Any indication that there could be more exits from the EU would make money flood into silver, into gold. Any sign of potential European instability, it's going to send investors running into precious metals, as it already has begun to do. Deficit spending, and it's going to be very aggressive. This is also going to benefit silver and gold. And so funds reduce their gold net long position, or the difference between bets on a price increase and wagers on a decline, by 10% to 67,982 futures and options contracts in the week that ended February 14th, according to the U.S. Commodity Futures Trading Commission data released. And so the wagers, they're still up about 65% this year. On the COMEX in New York, gold futures, they climbed 7.4% in 2017. We've seen prices have rebounded dramatically, and they're on a steady uptrend. Yellen, she came out, she was talking to the Senate panel about interest rates. It didn't even hit a bump. That's because people are understanding, they're beginning to wake up. Investors don't seem convinced that Yellen is telling the truth anymore. Fed fund futures data on Friday, it showed bets reflecting a 34% chance of a rate increase in March. So they don't even believe her on a interest rate hike. But as we see this Goliath of interest and inflation, this Goliath of inflation that is forcing its way down the throats of the American worker right now, up to 3%, when their target was 2%. Since when is the Federal Reserve in charge of controlling inflation? And so, even if borrowing costs do move higher, the market has already priced it in. They've been well warned by the Federal Reserve for a long time now. And they're just not buying it anymore. The world is moving into gold. Gold could rally to 1,300 very, very shortly, should anti-EU candidate Marine Le Pen win the French election. And it will spur a massive demand for silver and for gold. So what we are watching is silver setting itself up for massive gains. ETF investors are already hoarding gold in Europe. 7 of the 10 precious metal ETFs that have attracted the most money this year are in Europe, with Frankfurt-listed Extra Gold drawing $1.6 billion. That's double the $894 million that piled into its biggest rival in New York. So Europe is already awake and aware of what is coming. Hunger for bullion is so strong that purchases of ETFs backed by gold last year eclipsed buying by the world's central banks. So more investors. We've seen that the central banks have picked up and have been on a buying spree recently since the 2008 crisis. And so just over this past year alone and continuing into this year, we see that the biggest holders of metal for the first time since 2010 is now private investors. They're rushing. There is a surging, massive demand. There's troubles even in the physical market. There's India, who was trying to go to a cashless society, who's trying to force down the value of gold and silver, increased a massive tax to try to prevent capital outflows. And so even with their market being suppressed, the demand is still growing. The world is preparing for the shock that is taking place, Europe especially. All right, thank you guys for joining me here on the Silver Report. The time has come to get ready and to prepare. If you like the videos, be sure to subscribe. There'll be more videos just like this. Like the videos, share the videos, get the word out. It's time to wake the people up. All right, thank you so much for joining me. And again, as always, stay safe.